Wake up, goddammit. Welcome to MARKETcast with Unk and Market Monk. Morning, P. How's your week?
It was good. Just really did well on a couple DE and Ulta. Kind of a different setup, but just sort of saw industrials taking off. Tech's kind of hard right now. I mean, it's we had talked Nvidia last week, and it did hit all time high again, but that's just kind of dicey up there. So a lot of good stuff lagging. Noticed a lot of short squeezes starting to fire up some of the smaller stuff. So, but it's about finding your spot. I think we had the overall trajectory down pretty well. Market just exceeded our expectations, so it's got to be ready for that.
Yeah, I definitely didn't call the week or anything. Exceeding expectations is a good way to look at it, but we've definitely had the markets going up. God, 4 to 6 weeks. I mean, we've been saying it the whole time. Like, just not seeing the downward pressure. I talked about who was going to sell, like who are the sellers, stuff
Yeah.
like that. For me, the big post-it note on the wall is play what you know right now. There's like nothing that I'm playing. Very rarely, maybe something will have some news or just look too good on the level two volume side. But I mean, I'm playing stuff like Piton, Neo, Fubo, the AI names, which we've been on those this year, Polestar, Space Ride. I mean,
Yeah.
this is all stuff we've been on the whole time. It's just its turn right now, and I think that's the skill in this game is finding what it is. And like midweek, we kind of identified, hey, EV. There's something up with all these EV names, and you just kind of catch it and ride the wave. And I think that's where we are for the rest of the year, just with things kind of getting up, but not all at the same time. We're not all going to stand up and applaud at the same time. It's going to be what you've seen so far since about October.
And here's just one good example of when you just walk away. So SQQQ, we've done very well on that, and we had a zone where we like to add it, but it had a really aggressive breakdown, which obviously coincided with QQQ taking off. So just because it's not, it's under $20 now, that doesn't mean I want it right now. Whereas before, when it was, in the low 30s, or it would kind of be in our zone, it's like, okay, we should scale in here, because that was just the character of the market at the time. But I don't think, I mean, there's a lot of people just buying this all the way down, and just even as a chart, the chart's in trouble. Yeah, the market's going to pull back, but it's just not the time for it. And I think that really it kind of encapsulates what we do here. Just because something's cheaper, it's not better. It's bad for it to fall below our setup. We just stay away and then let it reset and go from there.
Yeah, I'm the first guy to, I guess, kind of hit you back with the cheaper's not better because I'm a firm believer cheaper's better. But it's like that $5 bin at Walmart with the movies in it. Like you got to dig to find the
Yeah.
good ones. It's just not all of them. You just don't grab every cheap one, and they're good.
Right.
Like you
Yeah. Yeah.
have to find the good movie in that bin, and they're few and far between. Um, yeah, no, we got plenty of those to talk about. I think we mentioned IDEX this week. They're not
Yeah.
all
Yeah.
they're not all good down there.
Yeah. Yeah.
Um,
There's some bad movies in that bin. So yeah.
yeah, yeah, and sometimes you gotta to keep the analogy going there. Sometimes you gotta let them play out a little bit, right? Sometimes
Yeah.
you're better
Yep.
off letting those get back to the dollar 20 range. AMRS, shout out to you. Than trying to
Yeah.
scrape the bottom just because you have more, um, I guess, checks and balances in place from the system that hey, this is going to have upward momentum. Fubo is the same way too. Um,
Yeah. Well, going back to that cheaper is not better thing, this is where the option share thing comes in. Because I think on the option side, cheaper is definitely not better.
oh, cheaper's way
In a
worse.
lot in a lot of circumstances. And it can just be like, even on the same stock, the $300 option is better than the $50 option. because it depends on how far out of the money you are, and you can get the direction right, and your contract's still not going to do anything. So yeah, that's kind of where that's coming from, and
That
that's
this
where
is
I think the two
I think this is
the
like
two approaches work.
the unsaid, and I don't even trade options, so I could be like way out in left field here. But from these cheap seats out here, that's where I think Twitter gets it wrong, and you get it so right. Um, is they don't they just play like stuff with a lot of volume, right? They don't really play
Yeah,
like Spy. Spy is probably the best example, or the Qs. Like those things are moving like $10 a day is a big range for Spy. Like that's still a pretty big range on Spy. The stuff that you pick up, it could still be $200 or $300 stock, but it's moving like $65. So like your strikes you
yeah,
can play, there's just so many places to play, and I think that's a big which doesn't turn into musical chairs when you get to move.
right.
And I think that's the
Yeah,
difference between you and a lot of the Twitter callers is they're playing actual volume of equity, and you're playing range and price of stock or of the options. But it's more has to do with the range. It seems like you want that really big range instead of, oh look, I made it from 1950 to 2125, and the option did move 50%, but that's the equity only moved 75.
yeah, yeah, exactly. And the way that they play these, they're never going to find something like MDB, like, because I mean the volume isn't huge compared to Tesla or something like that. But we've talked before about how that stock is constructed, and the insider ownership, the float is small. So it just meets all these criteria where you can get some really good moves on it, and then by the time they notice it, it's after it already went up 30% on earnings, and then they're gone again until the next earnings comes up. So yeah,
Yeah, I mean, I started noticing the $30 candles, but
yeah,
there's just a lot more to it, and it's probably easier to trade, to be honest. It seems like it would be on
uh,
the option side, just
yeah,
because
it
less
is.
crowded
Yeah,
and the moves are more substantial. Um,
yeah, and sustain too. They're just not going to just they don't just kill it right away. So like John Deere is a good example. Once it started to turn around, or Ulta, the
yeah,
the ER aftermath calms down, and they start to make a move up for some pretty legitimate reasons. I mean, it was oversold. The company's fundamentals are decent, and it just gets some recovery without just getting constantly beaten down um, by people trying to shake out option positions. So that's why crowded trades are so dangerous, and it's why even with as well as Tesla's moving, it's still you're still taking on a lot of risk trying to trade that right now, and because intraday there's just so many attempts to shake you out.
yeah, no, that makes total sense. I guess the right amount of eyes in some cases. Share side, it
Yeah,
doesn't matter, right? Like you really want more people
yeah,
in it,
yeah.
especially on the bigger stocks. But options and shares are different.
Well, and that's our whole thing too is we don't need to pump anything because we get in early and we sell into all that just by nature of everybody piling in as it gets moving. And we've done that so many times.
Yeah, not to pump the Discord or anything, but if you sign up for the Discord here, one of the best services here on the planet, um, we did Carvana at $7 and $8, not here at 20 and 22.
Yeah,
So we've moved on to the next one. We're looking for the next thing that's going to squeeze, not trying to squeeze the rest of the juice out of that.
yeah. I mean, even if you cleared most of your position and your free shares that were left, and you had spent $100 at our entry, those are worth quite a bit now. So even if you just kept a few of them, but yeah,
Yeah, no, that's why I stress the share side because you can just sit on it. You can't really hold a free position long on option side, right? Like that has an expiration. So even if you got like
yeah,
let's
yeah,
say you bought 10 and they went 100% and you kept two, right? So you're up and they're really free. like those eventually go to zero, right? Like those either go to zero or you exercise them, right? That's the two options there.
Yeah, yeah. Or you can roll them, so you can just you take your profits and kick the can down the road. But there's just a lot more maintenance to that than there
Th-
is
then free
share
shares.
side. And then
Yeah.
when it's Carvana and the IV is insane like it is. It's just not really worth it. Like I'll sit on Veil, I'll sit on Gold Leaps, and do the roll and all that. I mean, but it's they're just it's a calmer setup, and and so but yeah, no, completely agree as far as that goes.
Yeah, and I mean, if you were trading Carvana at 7 and 8, even if it was small positions, I mean, I can only trade a couple $100 in shares. Okay, well, if you traded it down there and you ended up 5 or 6 shares up, it's only $40, but when it goes to 20, now you're up 80. And
Yeah.
you can sell into that run. And you guys can do the math on that as that
Uh,
grows, but that's just where the share game's at, especially on stuff that's like Upstart or even in the GME and AMC days. That's really was the better position to have, was just some shares that were free. And I don't think
yeah, and
it's
I think the shares, and I've said it this way before. If you're trading options, having some shares, putting profit to shares, whatever, it protects you from yourself. Because if you have a $10,000 account and you're devoting $10,000 of it to options, you're putting a lot. That's a lot of risk. But if you have a $10,000 account and 2,000 of it is options, and just half the rest of it is in share swings, or whatever, or you just say, like, I'm just gonna buy VU every week or something, and you just have a more balanced approach to it. You could have a horrible day in options, and it's not just going to blow up your account. So um, that, I think, is something people don't do. They'd rather just keep playing options and just reload. And it's hard to get anywhere doing that.
well, there's no account management with a $10,000 account. I mean, personally, I don't have a this is what I did golden path, because when I was that big, I put it in things that I believed in and went back to work and kept adding. So I
Yeah,
wasn't trying to day trade, but even for the ones that are, they probably should be a little more diligent and stricter on their situation, and they're not. And I would simply start with the rule, like if you have 5 or 10 and you are up, let's say to 7 or 12, right? You're just up a little bit. Um, you still trade with the smaller position sizing. Like that's what you got to nail first. Is you don't go,
yeah,
oh, I got
yeah,
10 and now I'm trading with 12, or oh, you just kind of always every trade. All right, I'm putting at the max. Let's say $2,000 in this trade because it's 20% of my account. And you don't, either you can win with it or you can't. And if you can't, you need to find another system. But just like I'm all in most of the time with what I got, whenever I got what I got, it's just like you're just pissing in the wind almost. And
yeah,
this game will take money from you, and you have to have some checks and balances. And I think a lot of people don't. They're just like, oh, I'm down to 9. Oh, I'm up to 13, and that's just what they trade with in 2 or 3 trades. And you need to be a little bit more diligent. Take it's use the fishing analogy. Like you don't put half the jar of the bait on the hook thinking you're going to catch a bigger fish. You just put the right size bait every time, and you keep catching fish until you
yeah,
can afford a
yeah,
flipping boat.
yeah.
um, but so how's the sorry, ran a little bit there, but I think that's important for those small accounts to have some sort of management to build on, right? Like it's
Yeah,
important.
yeah.
What do you got in the out there in the commodity world for me this week?
So I think we're at a spot in oil where it just doesn't have much more to give. Like, so it's taken these dips down into the upper 60, 68, 67, something like that. It's not lasting long. It's coming back. The stocks themselves they're not collapsing. It's not, Exxon's not $80 or $90. Like, it's there's some stability there. So levels are holding up. It's why I said in my sector focus I had the oil large caps in there, because I think that we are we're through a lot of OPEC stuff. We've seen some aggressive selling, and these stocks seem ready for a sustained move up, and I think oil futures are probably gonna reflect that, in the next week or so. So I think they're really tradable, and I also think a lot of these are at a spot where they're pretty good for swing. So kind of expect to see, like this week, I'm into Oxy, Zom, Exxon, all those, and expect to see a lot of the other ones coming back too. I think we have a few on the list that I might keep. But yeah, so I think oil makes a move up. I don't know that it's going to be um, dramatic, but I do expect to get back to upper 70s, maybe 80 um, in July.
Man, them gas prices still ain't went down out here. I'll tell you that. I'm still 450, all at 450. So I hope you're wrong, but you're probably right.
Yeah.
um,
Yeah, because you know how that works. They kept the price, and they're going to just jack it up
oh yeah,
it didn't go down with oil, but it's going to go back up with oil. Yeah,
exactly. No, I'm waiting for it.
yeah,
Totally agree with you. But that's usually my you know thesis around April going into the summer is all the hotels, travel, cruise lines, airplanes, all those are going to do good, and then the oil ends up being not really pumped like we seen to 125 a barrel, but oil gets into the upper part of his price range, which to me is that 80-85. I'm
yeah.
surprised we're still at 70, to be honest with you. I don't understand the geopolitics of it with natural gas and the war and everything that's going on, but definitely affecting things still. So I just leave that up to you.
Yeah, and on natural gas, our couple of us got in UNG at a good spot. Yeah, I think we're in pretty good shape there. Yeah, this can pull back. My whole thing with natural gas, I was like, as it could get into the 220s. You really don't want to see it break down from there. And it didn't. It held up okay at that level. So a lot of room to go here. I think as it starts to run, cold also gets more relevant. That it's going to respond well to the pullbacks. So that's a sector that we're way early on, but I think we had a pretty safe entry. But that's going to be important in the coming months too.
Yeah,
And then
that's a good one for that to link to that free share thing I was talking about back there.
yeah, yeah,
Like if you could get yourself a free position in there, you'll be fine sooner or later. Like those 6 and 7s
yeah.
aren't terrible.
UNG is, I mean, it's going to go 100% from here. It's not going to do it in a parabolic
No, but
short squeeze, but just yeah, yeah, those prices will come back.
definitely,
Yeah.
definitely agree.
And then real quick on copper, my lines held up. It never broke below 350. A couple weeks ago, 375 held, and kind of we're off from here. So it's 388 now. So a lot of the stuff, FCX, SCCO, which is my preferred one, um, really nice setup in those. I think not to me great for day trades. I just don't like to, there's just more bang for your buck going further out, and you can still day trade monthlies, but the point is you don't want that theta decay on those stagnant days to get you. But yeah, overall picture's great there. Breaks four, and we'll revisit some of those recent highs in copper. And lastly, crypto. So this, you know, everybody's looking for the big move down with Binance and with Tether and Coin and all of that. Then you saw BlackRock's doing their ETF. So there's just a lot of there's all this news swirling around, And the biggest mistake people make is thinking that there's going to be follow through to the downside on bad news. What tends to happen is you get a kind of a big jolt down and then recovery. That means that crypto stocks are very hard to swing, but tend to be easier to day trade, especially if you're looking for the upside. So that's kind of what I would look for here. Um, Bitcoin itself is still just it's just caught in a range here of really 25,000 to 26 and change. So there's nothing dramatic there, but the stocks uh, are kind of holding up, and I think they make a move higher this week. Some of them significantly. So that's what I expect there.
Yeah, I got a lot of not a lot of them, but a few of them made my list, and I had a couple that were close. So um, on the same page with you there. I, I'm kind of
Don't
man.
chase puts.
Yeah,
Don't chase puts.
don't
Like,
chase
I mean,
puts.
I don't even like how many different ways I can say that. But on anything, and especially on crypto, it's just the worst kind of trade.
Yeah, I'm. It's the one place I'm a bear, not in the stocks, but in the actual coins themselves. Um,
Yeah,
and my mindset get me on tape here early on this one because I mean I think it's a process that might take a while, but the rotation out of the Pepes and the Doges and all that I think eventually is going to come, and there's only one or two coins, Ethereum, Bitcoin, that people will go to. So
yeah.
I do think we get a run in there eventually. It's either that or take your cash out of there. But
There's yeah. So they're like Celsius is just going to sell everything that's not Bitcoin or Ethereum,
yeah,
and they're early there, and that I think is going to be the thing. And I actually so here's why I my only disagreement there a little bit is the really crappy stuff on the DeFi exchanges is still going to have its moves and runs because there just isn't any kind of oversight there. But the ADA and the Cardano and the Matic and
yep,
Link and Litecoin and all that, but those are in the biggest trouble to me. The ones that rely on the exchanges that are not Bitcoin. Um, yeah, they're going to have some big trouble. Um, and as on the flip side of this, if Bitcoin's going to make it, a company like MicroStrategy, MSTR, that's all in on Bitcoin,
yes,
is probably going to come out of this doing
well,
pretty well. And they can dip way the hell down if crypto drops or whatever, but they'll come back if
wake up.
Bitcoin's going to be the one that survives, which I think it probably is. So that's one of the reasons I stay on them.
Yeah, I just see it as like most of the coins, probably an unpopular opinion to some people that believe in some of them, but most of those coins are just created so you could do something with your Bitcoin.
Yeah,
like
yeah,
I don't know how else to say it, but like you just had Bitcoin, you're up. I mean, you're way up in some cases, and you're like, what do I do with this? And people were like, I got something you can do. You can trade these other coins. Do it again
yeah,
and
yeah.
do it
That
again, and
that
that's.
you can't go back to Bitcoin at $100,
But I
but you
got
can buy this coin for
yes,
$2 and it's going to go to 50 and 100 and 1,000. Yeah,
yeah.
yeah.
It's
That hope. Yeah,
just the lottery tickets for Bitcoin. I mean, there's nothing to them, and I think they do
yeah,
fade away.
yeah.
Kind of like the NFTs. I mean,
Right.
didn't even take long for that to go away. But I think you just see a fade of like, I mean, again, another thing to do with your crypto coins. Um,
Yeah, and I think the blockchain has a lot of real world applications, but it's going to end up being boring, and it's not something you make a lot of money off of in terms of a coin attached to one of these blockchains. It's just blockchains adapting into different industries. So
well,
yeah,
that's another thing them crypto bros got wrong, or like a lot of them that you talk to, like they think the blockchain is like a single identity, like it's just one thing.
yeah,
someone can go write a blockchain tomorrow. it's not
right, yeah,
it's not like there's just one chain out there.
yeah, right, yeah. It's an approach to computing. So
Yeah, exactly. So I mean, it's not I've always said that the stuff out now is not going to be the stuff we use and that we
yep.
actually use in the future. So, Um, let's move on to Spy here. Keep today.
Yeah.
It is Father's Day. I didn't shout that out yet. Happy Father's Day to you, sir. Um,
You too. Yeah.
but yeah, let's keep it a little tight today for that reason. Um,
Yeah.
um, I don't really want to claim the win last week on Spy, but I had smaller downside a little bit. I had way smaller downside $5. I had 27.
Yeah.
You had 22, and you had
Yep.
430, 450. You threw the 50 center in there this week, last week,
Yeah.
and I had 36. So I didn't have the upside as much as I had less downside, but I had a little bit more. Um, I'm inclined to just take the dub on you because you beat me so
Yeah.
much.
You can. You can
But
do it.
yeah. Let's just. I mean, the conversation should be more about the man. We got to 434, 444, 443.
Yeah. It just the market just showed no fear to the hawkish pause, and just ran right through everything. So it's one thing we've said. I mean, it's kind of playing out that news, especially bad news, is not having a
Yeah,
sustained impact on anything,
doesn't care. Doesn't
and
care.
they just move higher. So yeah, it's really hurting a lot of retail people because they think that the better trade, the safer trade, is the downside because it has to pull back, but it's just not doing it
I
just
mean,
yet.
even on the spy chart, I mean, just look at the weekly. These higher lows. How are you a bear into that? Like since October, I guess in December if you wanted to say, oh, it's gonna die, but when we caught that higher low in January, how have you been a bear? And then since we've been in the 400s, I don't understand how you've been a bear.
It's just a macro bias. I think it's just it's got to come down. Everybody sees those chart overlays too, of the .com bubble and all that. So they're looking for the big payout on the crash. That's all they're after.
They're def. I
But
see.
something has to happen for that to occur, right? I mean, you have to have an event, and it
Yeah,
has to be big.
yeah.
So, and how do you anticipate that?
It's pretty much a nuclear bomb at this point, or
Yeah, and you know what? We get
assassination
a
of
big
some world leaders or something like that. I mean,
if we get a big move down, it's going to be overnight, and they're going to miss it anyway. So,
yep, yeah.
um, yeah,
You're probably 100% right. They'll chase that move down.
yeah, yeah, yeah,
Exactly. No, I talked about that a couple weeks ago. There definitely is more room down, but there's not the reason for it. And we've just seen that pan out. I'm just surprised we've got through, through and to here so easily. That it only took a week. That it happened during the week the Fed spoke, um,
yeah,
which the market just didn't care about. Didn't really care about. Um, I guess it slowed down and listened a little bit, but as soon as it was done, it just went back to what it was doing. Um, but the Wednesday, Thursday, I don't know if you watched Read the Room. Read the Room dropped, um, but the Wednesday, Thursday in front of Senate and the House is probably a more important event just because of the context of the conversations. You know, whether they're blaming each other still or they're hopefully, like I said, they're trying to take credit for the slowdown at this point. So it looks a little more positive. Like we're winning together instead of
yeah,
it's your fault versus it's our fault. Or what are you going to do to get this done sooner? Those kind of context questions. Hopefully that's we're beyond that. But I think that's a bigger movement this week than those numbers were last week because anything can be said in those sessions. Um, or
yeah. No,
not said,
definitely.
or not said when asked.
Yeah,
um, so, so yeah, I think
yeah. The
less ERs too. So that's going to be where the eyes are mostly this week coming up for me.
Yeah, I'm with you. Yeah, ER. I think FedEx and Nike were the big ones, but
Yeah,
yeah, nothing major.
nothing major. So I'm gonna go first since I won
Yeah,
last week. Big championship here. It's trend continue for me. I really don't see any reason to pull back too much. Um, So I'm gonna have to pick one of these numbers here from midweek, which is either gonna be this guy. Yeah, I'll go there. I'll go there. Let's go with 434 on the downside. And I'm gonna say we get like to 448. That's a pretty big range. That's like a $15 range. $14
Yeah,
range.
I like that.
448 to 434. Um, definitely
Very
some
good.
more upside. Definitely some more upside. Higher than last week, I think. I don't see no reason for this to stop. There's a lot of stuff to continue to get up, and we kind of seen our first sector wide push. Granted, a lot of it was short squeeze bull crap, but you seen it with EV last week. If we get that in some better sectors, it could really move the market because a lot of stuff's still beat down outside of the big seven pillars.
Yeah, and like Adobe's a good example. Um, Big winner for me in the run up, but it had kind of a muted reaction to a pretty good earnings report. So you could see the SaaS stuff really get going here. I mean, some of them have, but there's some lagging stocks too in that sector. Yeah. Okay. So for me, I'm gonna say I'm gonna go 432.50 again. For the downside, that would be about, I guess, 1.5% down or something like that. And then yeah, upside. Um,
So you're saying crash, full on crash there.
or yeah, yeah, right.
Full on
That
crash.
well, they'll wait for it to get to 432.50, and they'll start. That's when the 400p will come out for people.
Full crash.
And then yeah, upside. I don't even remember the number you said, so mine might
Four
actually
four
be
four
close.
forty eight 48.
448. Okay. Yeah, I was looking thereabouts. Let me look at
Well,
these strikes here.
you're fine if it's the same. You got to go off your system.
Yeah, I mean that's kind of where the strikes concentrate. So yeah, I'll say 448. So if
You want
the
you want
tiebreaker is going to
you
be if we
you
get the
want
downside this week.
you want the 50.
Yeah, I'll give the 50 cents. I'll do the prices right thing.
I like it. Yeah, yeah. Downside to see if we how far we dip. Basically, is definitely the difference this week.
Yeah,
Yeah,
and
I don't.
it could be for like an hour that we're down there. I mean, um, just might not be very long.
I like it. I like it. We'll give us something to talk about next week.
Hey, you know something I noticed real quick?
Yeah, go for it.
People don't know how to read candles on the higher time frame. So like um, Nasdaq's been up, I think, 8 weeks in a row,
Okay.
and some guy was trying to say, I think he was on the weekly, and he was trying to say that it didn't, like, there was a week it didn't go, like it was maybe like 3 4 weeks ago. He was just looking at the candle. It was like a doji, but it still closed higher than it opened for the week, even though it the candle was in some fat. Know what those candles mean sometimes when they're reading those.
Yeah, a lot of the stuff that I see drawn or used as examples, just it doesn't even fit the technical term. And charts really don't move that way anymore, to be honest with you.
Yeah,
A lot of that stuff, um, yeah, it's I don't know, like cup and handles and stuff. That's the one I see abused a lot. Like
oh yeah, yeah.
it just doesn't. Yeah, higher. All you need is flipping higher lows and higher highs. Find a trend. I mean, all the other stuff is just bullcrap to me. Like, find some support,
Yeah, yeah. I
resistance, and find a trend. Like,
my
I
I
don't
mean
know.
my whole thing's dominated by horizontal lines. And then I mean there's trends and stuff you can draw, you know, based on that. But these levels matter a lot when, especially when there's a concentration of options around one of those
Yeah,
pivots. And
yeah,
heck, we saw it with coin a lot. I mean, we're in this zone. We'll be talking about that one, but like it's perfect because your level is right in between two of my local pivots. And all it's doing is just going off your level to the upper one, going down, maybe breaking through, and then it goes to mine, and then it's where's it going to go? It's going to go right back to yours. So I don't need head and shoulders, cup and handle, any of that stuff to trade off that.
Yeah, no,
Um,
the most consistent thing is support and resistance. I mean, it just really
yeah,
is. It's just where the money's at. Um, and it's more about like instead of like trying to identify chart patterns or A C B D E F G elemental P's or the fibs, or whatever you're doing,
yeah,
like master higher lows and support and resistance. Like I mean, it'll just change your game, and it's more consistent. It's the most consistent indicator. Um, I've
yeah.
seen.
And a lot of times with the what the whales are doing, a stock starts to fall, they're already in something, and they're going to go ahead and just protect that position that they're in. So it's not even just about, oh, this is stock's a great deal down here. It's like, hey, I'm not we're not going to let our $10 million option position go red here, and we can move this, so we're going to do it. And that's kind of a a part of it too, and that's where the flow is so important.
Yeah, not to get like on a rant here, but I mean, like my Carvana line,
Yeah,
this thing ran from like $15, but one, two, three, four, five, six. We hit 6 weeks where it had to touch that level. Um,
yeah,
I think Ride was it Ride? I think it was Ride. Pop up. No, it wasn't Ride. What? Something ran on some. We'll get into it because it's on the list. But something ran on Friday. Um, and it just runs right to the level. So once you understand support and resistance, um, learning how to trade off of it is like the next step for you, and that's really easy when you trust that it's going to do something. Um,
yeah,
and those probably aren't the greatest examples. I probably use Tesla as a better example. But what I mean, again, once you trust your levels and the stock responds over and over again, that's way better than like trying to look for a cup and I don't know. I'm just beating the crap out of this cup and handle, but it's way better than
yeah,
looking at a cup and a handle or high as RSI or what the MACD's doing. I mean, you can take that stuff into consideration, but just find a flipping trend, find some targets that line up with big money, i.e., the flow and options, and line up with the historical levels on the chart. I mean,
yeah. I
that's
mean,
all you really need.
yeah. How did people do who were looking at the daily RSI on Nvidia? I mean, it's saying it's overbought, $100 ago. Um, so, real quick on Spy, I wanted to give people some contracts to watch that are a little further out
Oh, you're gonna do that in
that
Q1?
have
You're such a nice guy.
that have they have a lot of open interest, and they also have some volume still coming in, and so one of them is on actually sold puts. So there's 152,000 something open interest. That's a lot. I'll just say that's a lot. It's the highest open interest contract on Spy right now, and it had 14,000 volume, but
When?
most of it was sold
When?
puts.
Sorry, when was that? Say it again.
Not it's 915
Okay.
400p. So this is puts for 400, obviously big level, and so it's a people buying that or betting that Spy is going to pull back to 400 by September.
God, that's
Really,
crazy.
a month before that, if you wanted to actually buy this thing,
Whoa,
and
whoa.
so it's about $279,
Oh
but it's 75% on the bid side now. So that means those are sold puts. That's not really realistic that it's going to pull back that far right now to these whales. Okay, so keep that one in mind. And then the other one, now this one is on the ask side. This is July 21st, 415p, 83,000 open interest. So it's in like the top 10 here. 6,000 volume on Friday. And it's SPY 415p, 721. So that basically, is saying that we get a move down towards 415. Don't have to get there, but like that's the only one that stands out as a big bet to the downside that's still getting a lot of buyers. And but the ones the really aggressive bets down, out into the fall right now are bid side. So kind of take of that what make of that what you will. Maybe just watch list the contracts. I don't know, but yeah, there's still a lot of optimism I think into the fall and winter stuff, and we will probably see a significant pullback, but we likely recover from it. That's my read on
God dang, speaking French to me.
that.
No, I pulled up the contracts, and there's just so many contracts for Spy, like every dollar for
Oh
$70,
yeah, I know.
so
Yeah,
it's pretty
yeah,
ridiculous. All right, we're
yeah.
getting a little long here. You ready to go to work?
Yep.
All right, let's do it.